Hey, what is up? I am Nix or NiicksFX. I'm probably gonna change to Nix, so let's just call me Nix, right? But I know this is a little bit different. I've usually not posted YouTube videos as far as like going over my strategy or giving you guys little tips. I do post like trade breakdowns and weekly analysis into my free Discord. Again, check the link in the description. It's totally free. Get in there. There's a bunch of free content. I mean, a bunch of free content. But other than that, I'm here to bring you guys a little bit of something new, a video on Fibonacci. Okay, as you know, days, weeks, progress, there will be a couple other videos going out as far as like other little pieces of my strategy, putting it all together. But I am so big on the fib. Why? Because it doesn't just have to be used with supply and demand. If you don't know, I'm a supply and demand trader. I've been trading for about 4 years now, and just been through the ups and downs of everything. But I have it together, right? I have a system. I know what I'm doing, and I'm here to show you guys what that is, right? And the biggest key factor that took my trading to what I believe is the next level is the Fibonacci, right? It's not just, again, we'll go a little bit more in depth, but the Fibonacci may not be what it is seemed to be. What I used to see the Fibonacci as is just some fucking lines that people would just enter off of, right? And that could be the case for you, and in some cases for me, but there's a little bit more in-depth explanation on some of these things. Therefore, I want to share that with you guys. Make sure you can implement it in your trading style. Again, you can trade trendline breaks, breakouts, support and resistance. It's just understanding the concept and why Fibonacci is used, and what it's used for can really help make your higher time frame bias a little bit more clear and understanding what I should do or what you should do going into the day. So let's get right into it. So we're going to start with GBP JPY. I can go over millions of examples with you guys, as far as like seeing this play out to the T, but basic concept is the Fibonacci is just a little bit more of a visual representation of where discount premium is. If you don't know what discount premium is, it's just, within a range, price has discount premium pricing. So let's say this is our range. We would mark this up. Okay, anything under the 50% equilibrium is discount. Anything above here is premium, right? If you ever heard the concept of buy low, sell high, this is what it is, right? You got to understand that institutions, because we're trying to kind of follow in their footprints to not get stopped out as much, as far at least supply and demand, right? We want to make sure that we're taking trades within discount if we're buying and taking trades in premium if we're selling, right? We don't want to buy at a high premium price, because majority of the time it's not going to work out. You're going to end up losing. You will find the occasional times where there will be a setup, but if you have the right parameters and the rules behind it, you can still capitalize on those, but they're just not as high a probability. Okay, so let's go into a little bit more of a trade example down here, where I've been catching a couple trades the last couple weeks, not even the last couple weeks, the last year or two, once I really start implementing this, where you can see price kind of react in that way, right? So we're on the 4 hour starting higher time frame. You can even use this on the daily, weekly, monthly. Again, it's multi-time frame, or multi-time frame usage, okay? But we are clearly changing structure to the downside on the 4 hour, okay? So what can you expect? I tell all my students, my mentorship, all the time that as soon as there's a break of structure, not as soon, but if there's a break of structure within the market, you can always expect a pullback. Where can you expect this pullback into? At least the equilibrium, okay? And about 95% of the time, you see this happen, where price sells off. We use the fib to mark up the high to the low, and we see a pullback into premium pricing. In this case, it came further than the equilibrium, and there's going to be those times where that's going to happen, okay? It's going to come further up. Sometimes you'll see price just come into this equilibrium, respect it, and then sell off from there, right? Because as soon as we hit this, we technically are at equal pricing, and any further than that, it's premium. So institutions use that as fuel to sell back off. But as you can see, we come pretty far up within the premium range, which isn't a bad thing. It's actually a little bit more, of a good thing, I'd say. We come in here, we start to see supplies being respected, okay? So now we can kind of have the bias that we're clearly bearish on the 4 hour. We use the fib to understand that we are in premium pricing. Now we can look to continue the sells, right? And this is where, again, I say you can use the fib on multiple time frames, right? Because now that we have confirmation that we're selling, we're clearly sweeping old highs, breaking structures to the downside in all these areas, okay? Let's just this area. In all these areas, we're breaking structure. We can expect price to continue to sell off, okay? And in this case right here, we can use this to again lower time frame. Make sure that you're selling within the premium range. So going down to the lower time frame, we clearly see prices still breaking structure. Mark up the fib, we can see a pullback into discount. Once we get into there, we know that I can look for sells, right? And we had this beautiful supply. Oops, sorry. We have this beautiful supply on the 30-minute and the hourly be respected, okay? And I know you see price clearly kind of, sell off and come back up. Good thing is, based off, or my strategy is having bigger stop losses. Why? Because to me, this whole leg of this range right here is valid. Price is still bearish until we break this high. So my stops are usually at the high, TP at the low, or further down, depending on my higher time frame confluences, and selling off from there. That was an example of a continuation trade, but now I want to show you an example of a pullback phase where you can try or capitalize on pullback of a trade. Okay, so going down into this area, and this is just one example. Actually, we'll go to Euro USD for this one right here. All right, so going to the 4-hour, we can see price is clearly pushing up to the upside. We're breaking highs, doing what price is doing. So we see the low down here, that low that led to the break of the structure. We mark it to the high. We can replay price like right here. We see this, okay? We know that price is going to have or facilitate a pullback, right? I said in the beginning, as soon as you see a break of structure, not as soon, I'm sorry, I keep saying that, but you see a break of structure, you can expect at some point price to pull back. Or two, majority of the time it's at least the equilibrium, right? It could go further down, it may just go into the equilibrium. So we go to the lower time frames to look for a possible entry point. Okay, and what do we have? We have clear bearish structure, right? Once we break this low right here, internal structure is now bearish, right? We break that low, we're continuing to break low, so we're just following price. We break this low down here, and we're just following price. We start to see nice supplies here where we can look to enter, right? We see a sweep of these highs, break this low, price is looking good. And we also know that the equilibrium has not been hit yet, meaning that price should, in theory, continue to sell off until we at least hit that. So what do? I wait for price to play out. I have my supply marked up. Stops at the high. TP in this case would be at the equilibrium. Why? Because based off my data, I know that price should at least come into the equilibrium. Let's do this. That price should come into the equilibrium 99% of the time. Okay, maybe 95% of the time, but majority of the time you're going to see that happen, where price will come into that area. And as you can see, price does come into that area. And then from there, what happens, we can go to real-time price. Price comes down to the equilibrium, discount, and shoots back up, right? And creates a new high. So what can we be looking for now? We create a new high. Again, break structure, we can look for a pullback, right? So we go to lower time frames. We didn't get no real entries, but again, it's just the idea that as soon as we get a break of structure, we can expect a pullback into the equilibrium. Therefore, you can create a bias around that and look for short-term sells or short-term buys. And then once price reaches that equilibrium, premium or discount, you can now look for structure to change back into the swing direction, and you continue with your continuation phase, right? And it's just understanding the fib on that level. I'm not saying entering off the fib, but just understanding and using the fib for a more visual representation of where premium and discount pricing is. I cannot tell you or express how much I've honestly changing my trading changed entirely. It just entirely once I kind of understood the concept of premium and discount and using the fib to my advantage, and not just understanding where I should be, putting my TP, putting my stop loss, this and that. Again, I'm big on pullback trades. I've always kind of heard, oh, you shouldn't be, taking, counter trend, whatever it may be. It may be counter trend on higher time frames on swing structure, but internally I'm within the trend and I'm just following market orders or following market structure into this premium or discount area where price should realistically go, because institutions are backing that. Because again, sell high, buy low. It just makes sense. Okay, and not only makes sense, it's just how the market moves. But that was just a little video on my kind of understanding and my look at the Fibonacci. You guys may have already kind of had the idea of it or knew what premium and discount is, but a lot of people don't use it. A lot of my students didn't use it, but I kid you not, as soon as I told them about this, they all started using it. It made sense to them. Again, you don't even have to necessarily trade supply and demand. Okay, I know I gave you the example of supply and demand. I know that, but in cases like this where You can see price clearly sold off here, broke structure to the downside. Once we kind of start seeing market structure shifts here, we can expect price to pull into where? The equilibrium, at least, right? So you can see price did come down into a supply down here, but if you were a little bit more, let's say you're a trend line or a breakout trader, you could have just, you know, this trend line break, right? You could have entered here, stops at the low, TP at the equilibrium, right? And then depending on your rules and the data that you have, maybe you go to break even and hold a little bit longer. Again, it just all comes down to you when it comes down to the little minor technical details. But the overall idea of this video is just to give you an understanding of the Fibonacci, okay? Understanding premium discount. Again, I want you guys to implement this. If you haven't already, I don't care what you trade. I don't. Test it for a week, 2 weeks, a month. Back test it first. Do whatever you feel like you have to do. But this is what you need to add into your trading plan. You know, if you disagree, tell me in the comments. Tell me your opinion on it. But I've showed a lot of people what I do. I've showed a lot of people how I approach markets, and a lot of people have adapted it and saw great results with it, even if they're not supply and demand traders. And that's why I love this so much. It's multi-style use, I guess. You can use it for any style of trading. But I hope you guys enjoyed that. I hope you guys learned a little something. Again, gonna bring you guys a bunch more videos, a little bit more in depth on supply and demand, maybe a course in the future with the basics heading into the advanced stuff. Okay, again, I have 4 years of experience, not a lot compared to other people, but I've been through the ups and downs. I have a lot of data. I've done a lot of work in the market. So appreciate you guys. I'll see you guys in the next video. Drop a like, drop a comment, do whatever you feel like you have to do. But I'll catch you guys next time. Later.